Bitcoin just hit $50,000, but now it's running the risk of running out of steam a little too soon in this bull market. Today, let's look at the resistance levels overhead, what could possibly come from these resistance levels to the downside. We'll take a look at the total cryptocurrency market cap for the altcoins, these potential 30, 50, 100x returns that we are anticipating. And in terms of the timing, where we currently sit and what these next 12 months could look like for the altcoins. We have got a ton to get through today. Make sure you hit that like and subscribe button if you are new here on the channel. Otherwise, if you've been here from the lows, let us know in the comments section what price you got Bitcoin at as it hits $50,000 today. Links, as always, in the top of the video description for our free crypto and economic report, which is due out in 8 hours. Get on board with that ASAP, and our 7-day free trial for the Gann swing indicator, which I'll show you more so in the video. It's your home of macro cycle analysis. You know the deal. Let's kick it off with the real estate cycle, then the stock markets, then of course cryptocurrency as well. We need to understand where we're at in the big picture because these markets are going ballistic. You may have heard it yourself, but reviewing some of the posts here from Michael and myself, just from, less than 12 months ago, coming up to that point now, we were looking at these markets bottoming and pumping. Now we are well and truly in the midst of this everything bubble, which I'm anticipating comes to some sort of peak roughly around 2026. Now, of course, on the chart that we continue to share, it says 2025, 2026. None of these markets are going to line up at the exact time. You might get stocks, then real estate and crypto, or crypto first, then stocks, or crypto, then real estate and stocks. It is going to depend at that point in time. But the main thing that we all agree on is that the markets are heading up into that time frame, roughly 2026. Now, it looks like we are still in this area of the market, breaking through those previous highs. This is for the stock market and real estate. As Michael shared about 10 months ago, we were watching real estate coming out of a decline. Real estate has gone up since that point, so hopefully you guys, if you were looking for property, have gotten on board with that. This is for Australia. We've covered it for the US as well, which is what this chart refers to. This is the big pump, the everything bubble, which is still going on, and as I said, expected to continue on for the next couple of years. And this also applies to the UK, Canada, and New Zealand. So you've heard me talk about that many, many times before. Stay tuned to the channel as this pump continues on into what was coined by Geophilus, which is basically Fred Harrison here on Twitter. He coined this term winner's curse. He invented something similar to this in the 80s and called the 1980s top. He called the 2008, 2007 top, and is now calling for this top as well. So I just wanted to bring this guy to your attention as well. This is where a lot of this information comes from, along with Phil Anderson, if you wanted to do more research, so that you don't get fooled out there in the markets around different blow-off tops in 2024 or recessions in 2023. Absolute jargon. Hopefully you're seeing through some of the noise out there as well. Previously, July, we were looking for this big, big pump in the stock markets. And what we're coming to see at the moment, which I want to get to in just a minute with some of the data, is the seasonality of the market. Now, we looked at this last year with those tops coming in seasonally for the second half of 2023. The markets were to go sideways. There were some corrections and significant corrections going down into October, but then to the end of the year, you're going to get that nice big pump to the end of the year. So what are we expecting now for 2024? This one here was the pre-election year. Here is your election year, which is now. We can see that this worked out for the pre-election year. You had your sideways and some corrections for the second half of the year. And then towards the end of the year, big pump. So now we've basically been climbing on the S&P 500. We continue to see new all-time high after new all-time high. This is on your monthly chart, but we go down to the daily chart. Even yesterday was another new all-time high. But seasonally, we do typically see some sort of correction in quarter one. And I've heard some of the comments saying, you've been saying that forever. Well, quarter one is 90 days. It's going to take roughly in that period of 90 days to see a correction. It doesn't happen from the first week of January and then goes down for the entire quarter. We're looking for a peak in quarter one for a correction that lasts into quarter one, maybe last into quarter two. Essentially, if we just look at the seasonality here from the post, you can see there's a bit of a pullback into this. I want to split it up. There's halfway, and there are your quarters. So probably into February, March, and then we start to work out. Then we'll have another correction again sometime in quarter two. Then the market likes to continue up slowly. You get the pullback for the roughly quarter three again, which leads you into the election. And like typically at the end of the year, you get that nice big run up that leads into that following year. So it's essentially along a very similar path to what we're anticipating for 2025, leading out of the end of 2024, continued on with this everything bubble. Now, we didn't just make these things up and hoped for the best. This came out of the lows that we were looking at for 1982 and 1983. They happened in 2022 with the cycle low. You can see here, this was October, and then we had a higher low in January there, and then it continued up into the banking crisis low, and then off to the races. Basically a huge pump out. Look what happened in 1983, exactly 40 years ago. Really big pump out of that low. Now, this isn't saying that everything is good in the economy and that we'll see higher prices forever. As I keep coming back to this is basically the symptom of what is to come next, which is that big collapse. So don't get blindsided by all of the negative news and the possibilities of continued recessions, which we are not in a recession. Make the most of these gains to the upside, which is what I'm going to get into for BTC and, of course, the altcoins as we're in that stage of buy up what you can, because we continue to see these prices go up and up and up. So the other piece that we saw last year was Elon Musk. Actually, this was in 2022 at the cycle low. Elon Musk talking about a recession into spring of 2024. Now, we're about 2 months, maybe a month or two away from spring of 2024. And Elon's prediction about the economy and the markets couldn't have been any more incorrect. Doesn't mean he's a bad guy. Doesn't mean he is not good at what he does. Of course, he's fantastic at what he does, being one of the richest men in the world with some of the biggest companies doing the most innovation out there. But when it comes to trading and investing, not a clue. This is what the majority were thinking at the bottom. Now, I bring this up because as we get closer into this peak, and yes, I bring this up again, the same thing for Bitcoin as we run into this 50K level, you start to see a lot of fear of missing out. You see a lot of greed at those peaks. And I suspect we'll potentially see something similar, not Elon Musk, but you'll see big names talking about how the markets can't go down. We see it at every single peak. We saw it at the previous Bitcoin top, how Bitcoin had to run to 500 grand, $1 million, whatever it might be. I will guarantee you that we will see that again at the peaks, and it's up to us to avoid that particular noise, because that is what keeps us in the markets at the worst possible time. Just like this stuff keeps you out of the markets at the worst possible time, basically at the lows. If you don't remember, the 13th of October, just 9 days earlier, was the exact low. You'd love to be in at those points in time, at the bottoms of the market. If you were following the channel last year, you might have recalled a chart similar to this, looking at the seasonality of the market. So this is just taking a little bit of a closer look now, put out by Carson Cycle, or looking at the Carson Cycle Composite by Ryan up here. Looks like we're heading into this stage. How far down does it go? As I said, we'll continue to follow up with that, but essentially just looking at the seasonality, it looks like it's time for a bit of a pause. I'm not suggesting you go out and sell your entire bags and hope for a big dip, because I don't know if we're going to get those very significant dips in the market. If we just look to where we are to the pullback to 50%, it's roughly 3.5%. Now, if that sort of dip is not worth the selling, then obviously don't sell. If you're looking for big corrections like recessionary type pullbacks of 20+%, I think your chance was 2022. And that time we won't see again, at least until we get closer to those peaks where things get volatile, or at least after the peaks, sometime after 2026. So just looking at that particular composite, that's where we currently sit. And as we've said before, looking at the rest of the year, there are pullbacks. It's just going to depend on how severe they are based on where that peak comes. You get big moves up. Typically, you'll get some sort of significant type of correction. Too early days. I just want to bring our attention to this, and we'll continue to follow up with this composite along the course of 2024. More indicators are running hot here. The extreme greed for the CNN, so basically for the stock market, we take a look, it has been running at greed and extreme greed since about December. Lows came in at extreme fear, back at that low point, and now we basically run up. So these times can last a while. Eventually you do get the pullback. It doesn't mean you go to a lower low. Just looking for a reset in that market sentiment as it is heated up quite substantially, especially with the NASDAQ as well, also hitting new fresh highs. As I've continued to point out, in that first half of 2024, I think we will see this turn or correction. And now we're looking closer towards that Q1 with the market continuing its strength. Big pullbacks, I don't think so. Smaller, more insignificant pullbacks, probably. Speaking of greed, the crypto fear and greed index has hit a new fresh high of 79. We are really running hot into this extreme greed stage of the market. We've hit extreme greed now. Yesterday was greed. And if I'm not mistaken, we only had a couple of extreme greed days leading into that ETF top. That was back around 9th, 10th, 11th of January. So now we've hit extreme greed. This is the highest reading that we've seen on the fear and greed since October, since the previous old all-time high at 69,000. Now we're going to turn from this point. I think you guys know the answer to that. There is no exact answer, but we are leading into these extreme readings. And typically it doesn't last that long in that reading before you get a correction on the market sentiment. So that extreme greed doesn't last forever and we do get corrections. That would probably be a good point to be looking to start your DCAing if you haven't already. Hopefully you have, or just chipping away at a little bit more Bitcoin as opposed to running hot in with the greed. The flip side to that is the price could be higher. That is the problem now as the market continues up. As we looked at yesterday, the reading above 40 can last for quite a considerable amount of time. And throughout that time, that is basically the entire bull market before we had a big correction into that May, June, and then that final stage of the bull market into the top there in October, November of 2021. And then basically it was all over from that point, and we didn't really see greed again until 2023. So what do you do with this information? Look out for a pullback on the market sentiment. That could be a good buying opportunity. It doesn't mean the market will pump directly after that day, and you could witness many days at those same price levels or those same market sentiment levels. So be prepared for the correction, be prepared for a period of time at those prices or around those prices. Now for BTC and the resistance levels ahead, what can we expect going forward from here if we're to hit these levels, and also altcoins? Bitcoin just hit 50,000. Basically, the top now is 50,300. We look at our Gann extension level for this entire run from September. So this is the run that got us into that ETF top. Projected from the correction point, so the correction going down to 38,500, half of that move takes us out to exactly where we are. So there's two important things that can happen from this point and why it's really critical. If Bitcoin slices through, this is where your trading comes in because there is no crystal ball answer to the black side. We're just trying to trade the market the best we can, right? If the market breaks through nice and cleanly on the 50%, 50,500, typically you can expect a pretty reasonable run to the upside. Of course, there is also the resistance at 52K. So they're coming in pretty close there, 50.5 to 52,000. I wouldn't be getting too over the top here with any of my trades, hoping for bigger prices because of the significance of this move to the upside. It's been 22 weeks from that September low to where we currently are, with only a 12-day correction, basically a 2-week correction in that period. From this point, the market is getting extended. There's no two ways around it. It's not an opinion. It is obviously getting extended. The difficulty is how far extended does it get? So they're the two levels ahead. Should we break through 50.5 to 52K, it should be reasonable running up to around that 100% level at 60-ish, 62K. As you can see, there's not too much ahead besides the previous little bottom here at 58. And then, yeah, you get to that $62,000 level, which is a 100% repeat of the previous run that we have already seen. The second option, we fail at the 50%, around 50.5 to 52K, and start to close back under the $49,000 top. That was the ETF top. Then the market is signaling that it needs more time to digest the move that it's had. It's more time to digest 17 weeks up, plus these last few weeks up, and potentially just needs more time in the $40,000 region to digest the move and form another base at a higher price. Basically what it's done the entire way up. We've seen higher bases form from the lows in 2022, a new higher base here, the 20 to 24-ish region, then again 25 to 32, then again we saw an upwards reaccumulation from 34 up to about 38,000. Then we hit the 40K to 45K. So if we are to reject here at 50 to 51, well, then I'm looking back towards around 44-ish to those previous tops. So maybe it needs a little more time in this space before it can start to push higher again. Now we're still got to get through the altcoin charts, but a quick shout out for the channel sponsor, SwiftX. For the Aussies, your price today is 77,000 Aussie dollars. The peak here is at 93, call it $94,000 for a round number. Bitcoin has well and truly taken out the 50% level here, continued to take out previous tops, as you can see back at these levels at 64 and at 72, and is attempting to position itself, I think, at least somewhere in above 66 to this next previous top level, which was the April top, at about 84,000. So basically just looking for that particular area of reaccumulation, roughly around 66 up to about $83,000 over the coming weeks. As for the altcoin market, well, we're seeing resistance ahead at 1.86. This is your 50% level from the all-time high to the bear market low, cut in half at 50%. We also have the 50% level of the entire range, like we just did for BTC, going from that September low to the ETF top. You can see that this particular range here, 50% lies dead on that number again, 1.86 trillion. So my concern is if the market can't break through 1.86 trillion cleanly, get some closes above there, then we face the possibility of rejection at that point and a pullback into this zone for, again, market to absorb the supply that's coming in, try to create some other sort of demand, some other sort of narrative to then continue to push these prices up later in the year. To me, this seems like it's happened all too quick. The chart has obviously said prices continue to go up. With this latest break, you can definitely start to feel that shift in the markets. You can feel that bullish momentum, the shift changing from could we have corrected further into this zone here, which of course we thought was absolutely ridiculous. There was a possibility of coming back to halfway. We only got slightly to the top area of that point, but essentially you're starting to feel the shift from the possibility of recession and bears coming out and more into that bull side, more into the greed of the market, which to me becomes a little bit more of a riskier play because we head into more extreme greed and we haven't seen a significant sort of correction from this point. With that aside, we have to continue to follow the chart. And in terms of the altcoin market here, so excluding Bitcoin and Ethereum, looking at where we sit in this accumulation and the breakout of the previous accumulation of the bear market, in the previous cycle, it was roughly around 15 months from the cycle low to that pandemic bottom. So basically the COVID crash low took 15 months and then it was straight up. I believe it was for almost 20 months. So that low to the top was 14 months, the correction of a couple of months, and then to the final peak was 20 months. And so if we look at a timing range here for the accumulation, it was almost exactly the same, except it started a lot sooner. So just the accumulation itself, looking at June 2022 to the low in August, you can almost take it out to September. We see that it was 14 months, and if we do take it out to September, basically 15 months. Across a little more, we got 16 months still in the accumulation zone, and then on the 17th month, it broke out of a few of the monthly tops. The 18th month, it broke out of the final top there, and it now sits on top of the accumulation zone. So if we look back at 18 months from the previous cycle, 15 months took us to that low, 16 started to push up, 17 pushed up again, 18 months, it broke out of just the monthly tops, but not the swing top. And it wasn't until the 19th month that it started to break out of the previous top. And then again on the 20th month, it broke out of the top back in June. So we are well and truly in that zone there, which is why we've been talking about this is the time to be getting into altcoins. The confirmation is there. after that particular low in September. The best time was September and October, but there wasn't confirmation on your altcoins. There was no confirmation saying that that was going to be the low. And so the risk that was run buying at that time is that some of those altcoins continued down. I've seen a few which have been talked about a lot, say GMX as an example. That continued down. That's gone down against its Bitcoin value. So it's been better holding Bitcoin during this period while altcoins have been going up instead of GMX. GMX broke down from that August low. That was August, September, when all the altcoins, well, most of the altcoins found their bottom and ran up from that point. GMX, on the other hand, has run down. So pay attention to whatever altcoin you are holding to see that it has held up from that bottom. The bottom being August and September. You can see here again, there is your August, September, and SHIB has also gone down against Bitcoin. Solana has been strong. Solana, there is your June bottom, then your September bottom, and it has been strong running up from that point. So that's the difference between a weak crypto and a strong crypto. Your job is to get onto the strong cryptos and avoid the weak ones, which will take your money. The strong stuff is going to give you those gains and make the risk of getting into altcoins worthwhile. You don't want to take the risk on crap like Litecoin that continues to go down, like crap on XRP that continues to go down. This stuff is going down against Bitcoin, which means it's getting less gains than Bitcoin in a broad sense. Another one to that bag is Link. It has been going up since those August lows. For Link, it had a June low, higher low for August, and now it's continued to push higher. I want to hear from you guys. Pinned comment down below. Which altcoins are you finding that are strong against Bitcoin during these periods while Bitcoin has also continued to show its strength? Because essentially when Bitcoin's showing its strength, typically we see many altcoins also drop off. And it's not until Bitcoin pauses at higher prices that you start to see the altcoins go a little bit crazier and you get those degenerate moves to the upside. But if Bitcoin corrects, unfortunately, the majority of altcoins will also correct. There will be the few that don't, but typically what we've seen in the past is that altcoins will also correct not only against their US dollar value, but against their Bitcoin value, which means there'll be bigger losses. So I want to hear from you, top of the comment section, as you hit that like and subscribe button, which altcoins are you wanting to shill because you're seeing them as being strong on the chart? Let us know in the top of the comment section there. I'll see you guys at the next video. Until then, take care and peace out.